Welcome everyone, and thank you very much for your time and interest to join us today. And for those who don't know me, my name is Zhao and I'm a Vietnamese qualified lawyer living and working in London currently. And I'm also the founder of a small private group, UK based, focusing on doing business, investment, and life in the UK for Vietnamese people. So our exclusive talk today is about London property market, and I'm very pleased to introduce to you Mark von Kroner, who's the board director of Benham Reeves since 2001. Mark oversees the company rental and operation, as well as securing new business. He also working closely with the managing director to develop the firm's core service and regularly present at international seminar for investor. Mark is a property investor with an impressive portfolio with more than 25 years and is a regular major contributor in the UK. Also, Mark has more than 20 years working closely with clients based in Asia, but wanted to buy an old property in London. So, hi Mark, I think I will pass on to you. And thank you very much for your time. I'm not sure if you wanted to start with anything about yourself that I had made my message.
Sure, thank you very much. Thank you very much, Chow. Yes, so my name's Mark von Grunther. I'm a director of Benham Reeves and I'm based in London. I'm sure I'm not alone in saying that having worked in London property for the last 25 years, 2020 is pretty unique. So times like this are tragic, of course, and our hearts go out to those suffering from or helping us through the virus. But it's good to see today that things in London and globally, of course, are slowly reopening and returning to normality, with restaurants and cafes opening in London just a couple of weeks ago. So what I hope I can do for you all right now is to cut through a lot of the hyperbole and explain what is actually happening in London property at a ground level. So as agents, we are working from our offices again, seeing things from the perspectives of developers, tenants, landlords, and investors around the world, including in Vietnam. So to give you some context about our company, Benham Reeves has been established in London property for over 60 years. We have 16 branches across London and internationally have 8 branches, ranging from Hong Kong, Singapore, KL, Shanghai. In India, we have 3 branches and 1 in Dubai and Kenya. We help our clients with a one-stop service. And as an investor's agent, we're unique. Not only are our overseas offices on hand, not only to sell properties, but to support our clients through the life cycle of property ownership, where we give advice on investment and support in every area. And today, we manage 3,000 properties in London. So very briefly on what we do as a business, what do Benham Reeves do? Well, in a word, we do everything property related. That's from starting with property advice of what to buy and where to buy. We then do the handover and snagging, so you don't have to come all the way to London to check your apartment. We can do that for you. We can deal with the furnishing or refurbishment or decorating. Then we deal with lettings if you want to let it. And then we'll deal with all the management, any issues in the property, we deal with it for you. And if you're an investor, you have to do a tax return. And again, we do that for you in the UK. And everything we do is done in-house. Nothing is subcontracted. So we never get let down, and therefore we never have to let you, our clients, down. So now turning to what's been going on in London. As COVID hit, the London property market froze. Demand for rental properties fell by 55% in March, and there was a 70% drop in buyer inquiries. And if you look at the reverse of that, 45% of inquiries, rental inquiries, held up, as did 30% of buyers. But over the last month, as restrictions on agents were relaxed and the market reopened, demand for rentals and sales properties has bounced back above pre-coronavirus, pre-COVID levels. And in fact, today we're actually experiencing 7.5% more inquiries than we did in February before the virus. And in June was one of our best months ever, as we let more homes this June than we did compared with June 2019, with 65% of them let within 5% of the asking rent, and 50% were let for longer than 1 year. And interestingly, 10% were actually let for over 3 years. And on the day that the government announced their decision to reopen the housing market, the UK's biggest portal, property portal, Rightmove, reported its busiest day ever on record, with more than 6 million visits to its listings, which is an 18% increase compared to the same day a year before. And in fact, rental demand surged to see the highest numbers of inquiries in one day since September 2019. Zoopla reported for May dramatic increases in both lettings and sales inquiries, with the number of sales now at pre-COVID coronavirus levels. And importantly, demand for homes are 46% higher than the levels they were in early March. And the next is the latest figures from HMRC showed the house sales jumped 16% in May, which is another sign that the London property market is fully back to life. And if sales continue at this rate, supported by low mortgage rates, then prices will rise much faster than predicted. And last week's government announcement should make them rise even faster, with the government scrapping stamp duty up to £500,000, meaning that everyone who buys a property in London that completes by March 2021 will save up to £15,000. Yes, investors will still be liable for 3% stamp duty for buy-to-let properties, but it's a fantastic saving. And I do believe this is going to encourage people to move, which will help fuel the market. And this additional support for property market will help the wider economy. And so for those considering an investment, this is the perfect and frankly unique time to be investing. Borrowing was already cheap, but it's even cheaper now because of COVID-19. Bank of England base rates have never been lower and are now 0.1%. And unlike the financial crisis of 2008, banks are now fully capitalized and they want to lend. And with global markets in turmoil and money in the bank actually losing its value when inflation is taken into account, property yields of 4 to 5% look increasingly enticing. And sterling, which had never fully recovered from the Brexit turmoil, has taken another hit. This means that overseas investors can benefit from a sterling discount of up to 30%, effectively enabling buyers today to get in at the 2014 exchange rate. And from April 2021, overseas buyers will have to pay an additional 2% stamp duty. This was already creating some pent-up demand, with many planning to beat the deadline, and they're now starting to pounce. And with last week's stamp duty holiday announcement, people are even more focused today. Meanwhile, developers are also offering good discounts. Many have completed units, which they need to sell in a buyer's market. So there are some good deals to be had. But let's not lose sight of what really matters. That London has proved time after time it's an extremely resilient city, be it in the face of terrorism, recession, or illness. Property has always been the safe haven, and London continues to stand out as the world's capital city for a number of reasons. The first one is business. There's been very significant post-Brexit investment by lots of large international companies like Bloomberg or McKinsey. Second is finance. London has the highest concentration of financial and professional service firms in the world. Third is tech. London has a very strong tech sector with Google, Facebook, Amazon, Apple, Snapchat, already with new announcements of new headquarters in London. Fourth is education. London is the leading academic hub. It has around 450,000 overseas students studying in the UK every year, which contributes £20 billion to the UK economy. The next reason is the fifth is the rental market. 1/3 of London households live in private rented accommodation. And that's the biggest shift I've seen in my 25 years. And it's going to increase further. PwC are forecasting that by 2025, 60% will be renting a property. That's a fantastic demand for rental property. And the sixth is the economy as a whole. The UK is the world's sixth largest economy. And London economic growth is double the rest of the UK, and things are going to get a whole lot better when Crossrail comes. And at Benham Reeves, we are optimistic because this is a market with sound long-term financials. COVID is a crisis with financial implications, but it's not driven by finance, as the banks are fully capitalized and keen to lend flexibly. Most importantly of all, and this really is crucial to create some context at a time like this, never in London's many centuries of history has there been a crisis from which markets and house prices have not bounced back stronger. And that includes the Spanish flu of 1918, the Great Depression of the 30s, the stock market crash of 87, 9/11 even, the credit crunch, or even Brexit. The market is now returning, and I firmly believe this is a time of opportunity and a great time for people to invest because there are low interest rates, discounts, strong rental demand, the cheap pound for overseas buyers, and finally the new stamp duty holiday. And as Warren Buffett puts it so perfectly, widespread fear is your friend as an investor because it serves up bargain purchasers. And whether we're talking about socks or stocks, I like buying quality merchandise when it's marked down. And there has never been a time in history that London property didn't bounce back from being marked down. So quickly turning to our forecast for property in the UK. And for sales, UK house prices increased by 2.4% in the last 12 months, which is up from 1.4% at the start of 2020. Zoopla saw asking prices for sold homes in May 7% higher than last year, with a 34% increase in agreed sales. And so the revised forecast for London for 2020 is flat, with a forecast of 2 to 3% in Q3. And over the next 5 years, average predictions are 13 to 18% growth in London sales prices. Turning to the lettings front, forecasts are for a 15% growth in London rents over the next 5 years, with the prediction that 60% of Londoners will be renting by 2025. And I'm not just optimistic, in my professional capacity, but also as a private investor, where I continue to look for value and believe this is a wise time, not just to hold property, but also to pick up some really good value. It's important to target your investment. London may be a single world, but look here, there are 32 different boroughs with different cultures and different property profiles. Property investment hotspots have been created, especially with Crossrail, now the Elizabeth line, which will dramatically reduce travel times and increase London's rail capacity by 10%. And a combination of lower prices, higher yields, and greater capital appreciation mean that we now look as a company at investments outside of Zone 1 with a big focus on regeneration areas. And regeneration is about creating new places where people will want to live and work. Berkeley Homes are one of the UK's leading property developers, famous for placemaking and building superb developments in regeneration hotspots. And this is one we're working with today, and I'm going to talk about their product. And because all of what Berkeley do translates into capital appreciation for investors that buy into the vision of these projects, particularly those that buy early in phase one. And if I look at a couple of examples, the one example is Beaufort Park in northwest London. They have a target of 3,000 new homes over a 15-year period. And we've been there, Benham Reeves have been there since 2010 when we opened a branch on site, and we've seen the site grow in terms of popularity, but also in terms of rentals have gone up and capital gain has been there with prices going up. And investors in phase one paid on average only £335 per square foot. But today, they achieve around £700 a square foot. That's a phenomenal 110% capital increase, which has been complemented by yields of over 8%. The second example is in southeast London, in a development called Royal Arsenal, also by Berkeley Group. It's part of a £1.2 billion regeneration project over a 30-year period. There are 2,500 new homes here and a new Crossrail station on site. Again, investors in phase one paid an average £275 per square foot. And today, they also achieve over £700. That's 150% return, gain on your money, plus yields of almost 9%. And even during what's been happening over the last 5 years, where growth has been more muted and with Brexit and everything going on, both of these developments have still seen 22% capital growth. And the story in both of these cases is choosing an area where tenants want to live and they can afford it too, which in turn creates strong rental returns, both in terms of rental yields and a strong capital growth, which makes a perfect investment. So that brings me on to an example of something I've got today. It's an exclusive launch for you today. It's a whole new London neighbourhood being created in the West London Borough of Ealing. It's one of London's most ambitious regeneration projects, bringing vibrant new village full of gardens, parks and piazzas, and all just 17 minutes from Oxford Street and 30 minutes from Canary Wharf for CBD. Because, like Crossrail, there's going to be a Crossrail station right across the road, almost on site. This is an extremely good opportunity. It's phase one, it's in a regeneration area, it has a great developer, and it's for a relatively low entry price. And in fact, I'm going to talk about the project now. I'm personally so confident in Southall Waterside, which is its name, that it's going to become a new London hotspot, that I've already reserved a flat here to rent out myself. Because with yields of 4.5% coupled with a forecasted capital growth, this has all the ingredients of a great investment. So now let me run through Southall Waterside in more detail. So I need to get the slides. It's not clicking. So I'm going to go through the main slides on the development so that you can see it. Southall Waterside is a fantastically interesting project, and it's where is it in terms of London? So it's this huge 88-acre site with a station at one end, the Southall station, which I hope you can see. And then Paddington is straight on the railway line, and it takes about 10 to 15 minutes to get into Paddington, and then on to Oxford Street and Canary Wharf and beyond. It has canal water facing, 1 kilometre of canal water frontage on the left-hand side, and on the right-hand side, you can see where the railway line is going to be. It's right on the west part of London, as I said, not far from Heathrow Airport, But Heathrow does not affect the noise because the development is built away from the main part of this development. The runways go in the other direction. You can see it's not far from Wembley, or Ealing is the closest borough. You have the Royal Botanic Gardens of Kew, Twickenham for rugby fans, Wimbledon for tennis, Westfield for shopping. But this is all so easily connectivity because it's so well positioned and has fantastic Crossrail station. As I said, here's the journey times that we've got. As you can see, 5 minutes to Ealing Broadway. Sorry, I said 10 minutes, but it's only 5 minutes to Ealing Broadway, 15 minutes to Paddington, and it's incredibly well connected. Tottenham Court Road in under 20 minutes where London University is, and then on to Canary Wharf 30 minutes away. There are lots of employers within easy reach, and this isn't for me saying you want to go and apply for jobs here. This is about employers whose staff will need somewhere to live. So if you're buying for investment, you need to think, who are your tenants going to be? And only 8 minutes away at Heathrow Airport, you've got all of the airlines. But not just the airlines. Think how many thousands of people work in the world's busiest airport. Thousands of people, and lots of them need homes. Whether that's rental or buy, but this will be the best development closest for them. I talked about regeneration a few minutes ago and why we recommend it. Well, here is a fantastic regeneration project. It's one of the most ambitious. It's 88 acres of land, 3,750 homes. They're spending £1 billion regenerating here in investment. 13 acres of parkland, and it's got this huge 500-meter long park. You know, and it's fair to say that we've seen as a business, and certainly with Berkeley Group, if you take regeneration and you add in Berkeley Group as a developer, you always see increased growth and prices. This is a little example of showing how Southall, which is where the development is at the bottom, how that's compared with Ealing prices. Just look at the difference in the prices. It's the same borough, but it's half the price. You've seen these increases in time of Southall of 18.96%, whereas Ealing's only done 4%. When this development gets going and Crossrail comes on, you'll see the growth even stronger than this. So I'm going to run through 10 reasons why this is such a good project. So firstly, it's one of London's most significant regeneration developments, which I've already said, and it's written here on the slide. It's going to be a place to live, work and socialise, full of gardens like this. And this garden that you see now is exactly how it will finish. When they have built all the developments, this is what it will look like, exactly like this, almost down to the grass and the trees and the brickwork. There's going to be shopping, restaurants, art, entertainment, cafes, and while you may think, oh, I'm not going to live there, why is that important? It's important because this is what residents want. And you need good facilities to attract tenants. And if they're attracted and they live here, they pay your rent and you get more rent and a quicker rent. Second reason is it's a fantastic investment opportunity. With the whole regeneration going on, it's going to see capital growth, similar to other Berkeley schemes I talked about. The next slide is connections and Crossrail. I've obviously touched on this, how close it is, but just look at these journey times, how close it is to get to everything. And Crossrail is hopefully going to be open by the end of 2022. And it's simply going to be 1 minute walk across the road straight into the station. You've got the new retail, leisure and entertainment facilities, which is great if people are going to live in this new vibrant village environment. There's going to be things for them to do, places to stay and give a real sense of community where people are going to want to live. This is all important because it helps your value in terms of capital and your rentability. And look at these parklands. These are computer generated images, but this is what the development will look like. Every single Berkeley development I've seen, the images look exactly like the photos that you get presented with. They're building a linear park, a wetlands centre. There's 100 acres of parkland on your doorstep. It's already incredibly green, and all of what they're going to do now will only make it greener. They're going to be footbridges and walk paths and fitness trails for people to run along. It's going to be such a lovely place to live. It's going to have fantastic residence facilities. It's going to be the first development in the area that's going to have a pool. That's not coming right at the beginning. It's going to come later. There's going to be a lounge, a spa, a gym, a concierge. Again, very few developments have concierge, but tenants today, they want concierge and facilities. It's going to have parking. It's going to have cycle storage. Another nice thing about it is it's waterside living. It's got 1.2 kilometers of frontage along this fantastic Grand Union Canal, which goes all the way through London, all the way into Paddington. It's stunning, and you can go on one of these longboats all the way along. It's going to be a fantastic new facility for the community when it opens. Obviously, Berkeley Group are the UK's premier developer, and this is going to be their typical type of finish where you see incredibly high-end developments with high-end finish where people want to live here, and they maintain it beautifully as well. They don't just build and leave so things run down. They keep it so well maintained, and that's why 99% of their customers do recommend them to other purchasers. And we have many clients. I have one client that started with 1 unit, and they today own 42 Berkeley Group units. It's amazing. Again, a bit about Berkeley. Again, they're trusted. They have no debt on their balance sheet. So if you're an investor and you're thinking, oh, I'm a bit worried because I'm in Asia, and in Asia you pay the developer and you're never quite sure if they're going to really finish. In the UK, you don't pay like that. The developer only has some of your money. Your lawyer holds the rest of the money, so you're protected. And because Berkeley have no debt, they're going to be able to keep building. They also have 10-year warranty on their homes, which is through NHBC, and they have a 2-year policy with customer service to help you get through any questions you've got on your stuff. So last thing is, their developments are designed for life. It's got very energy efficient. They've really tried to adopt that. All of their white goods are going to be B and above. Communal heating and hot water, which is going to be via a centralized energy center. They're reducing the water usage and trying to harvest more rainwater. They've got green roofs, private gardens, and they're trying very hard to ensure they encourage recycling. And it's sustainable travel. They've got the water frontage, as I said, along the canal. They're footbridges. They've got electric charging points. They're doing everything they can to make this a sustainable development for the future. Because as people today have moved from diesel cars to petrol cars to electric cars, they want to set this development for the future. So in terms of the location we saw, there are lots of other things going on in development with retail, leisure, schooling, and obviously the station. And you can see this massive park at the bottom. So this is the first phase. This is where I bought. I actually bought in Sibley House, but the first block to complete is going to be Edwin House, then Arbour House, Watson House, and Sibley House. So if you want to save on the stamp duty, you'll need to buy in the first 2 houses, Edwin or Arbour House. Look how beautifully they're designed. They're built with brickwork. They're not funny colors that are going to look tired. And there's loads of greenery and trees coming. This is how we would suggest you fit out your unit, interior design. So something that Benham Reeves do is we do interior design. So we would fit your unit for you, whether you're going to live there or whether you're going to rent it. Obviously, it's a different type of product that you're going to want, but we can do this for you just to give you an idea. It's how we do your bedroom. It needs to be fitted like it's a luxury hotel, so it appeals to that high-end tenant. These are the kitchen appliances. You get all the appliances are supplied, the tiles, the units, the flooring, everything is fitted for you, and it will look just like this. You'll have different color palettes that you can choose too. Bathroom again, it'll be tiled with a shower and a bath. Toilet, which is off the floor, very modern. Again, there'll be different colors in tiles to choose. In terms of the tenure, well, it's always held by the developer, but it's on a 999-year lease. It's leasehold. You'll have a right to park if you buy a 2-bedroom or 3-bedroom. But today, if you're looking to buy quickly, I might be able to get them to squeeze in a parking space if you're buying a 1-bedroom as well. Service charges are relatively low at only £3.70 a foot. So on a 1-bedroom is about £1,500 a year. And that includes use of the gym and all the other facilities like the concierge, the tenants' facilities, the landscaping, everything's included, and the insurance on the building. And the ground rents are there. You have to pay a ground rent to the freeholder. If you did want to buy one, whether it's today or you get in touch with me or Chow and you want to buy, and we book a unit, it's very simple. You pay £2,000 to reserve it. If it's under £750,000, you then pay 10% of the money within 21 days from the contract. You obviously get your £2,000 credited back. And then you pay a further 10% after 6 months, a further 5% after 12 months, and then 75% on completion. So that shows you the developers working with you, they only hold 25% of their money until it completes. So in terms of units that we've got, there's a whole variety, and I'm just pulling up the price list here. So to give you an idea, the studios range about 400 square feet, and they range from under £300,000. If we look at 1-bedrooms, they range from anywhere from £370,000 for 530 square feet and upwards, and 2-bedrooms start at about £460,000, and again rise upwards depending on the floor and the size, but the average size is about 670 to 700 square feet for 2-bedroom flats. And we'd recommend a second bathroom, so it's just important to bear that in mind. But as I said, these prices are good value. You pay 10% on exchange, then another 10, and then another 5, and the balance on completion. So that is the end of my talk on Southall Waterside. Obviously, there are lots of other options. If you're looking to buy, we have many different things. This is my latest launch that has not been launched anywhere yet. And I'm launching it here because next weekend we're going to be selling it in Singapore, the weekend after that in Malaysia, then Hong Kong, then China, and then the Middle East. So you are very in because Chow brought me today to get you in there quicker. So if you're interested, any questions at all, please feel free to ask questions, and we'd love to answer them for you. Thank you very much.
Thank you very much, Mark. Hopefully that you're going to start launching in Vietnam soon, after China. Sorry, just to quick note, everyone, we're going to go to the Q&A section with questions that we have collected before the talk today, but you can ask any question by I think log into the Q&A tab, and we'll pick up your question once we go through the question that we have collected. So should we start like discussing with the question that we have had before, Mark?
Sure.
So in the registration that I have, there's 50% of first-time buyer who interested in joining the talk, and 50% is general property investor.
Okay.
So I will touch on the very first point that a lot of people will be interested to know at the moment, because you mentioned about the impact of COVID and the situation. Looking by the end of the year, there will be a Brexit. So when the best time to buy the first home in London, obviously this also for the people who are looking to buy first time for living in London, as well as their first time investment, like property investment in London. So when is the best time? Is it a good time to buy now, or should we wait until early next year when, to see how Brexit going and how the economy look like by that time?
Sure. So my view on when to buy. So the first thing I always say to everybody is you should buy when you are ready. There's no point killing yourself to try and raise a tiny bit of extra money in order to buy and push yourself. So the way I say to people is you need to be comfortable have your money ready, and that's the time to decide when you're ready to buy. Because we're only talking on a short time horizon, whether it's now or within 3-6 months, that's fine, but you need to be ready to buy. As I said, because there's no point spending lots of time and effort researching it, and then you find something and you can't buy because you can't get finance if you need it, or you can't get your deposit, or you can't get your money out, or whatever it will be. So my advice is make sure you're ready. So when you're ready, that's fine. In terms of the actual timing of whether you should buy now or wait till after Brexit, or whether you wait after the next election or you wait till the next millennium, my honest view is now is such a great time. Prices for the last 3 to 4 years have been quite flat, which I talked about where prices have gone. And so therefore, because they've been quite flat, in London, we've seen very little drop prices. It keeps being reported, but you cannot buy bargains. Prices have not dropped 20-30% like some markets, some Asian markets, where they fly through the roof and then they crash. London is a very stable market to buy in. So my view is this is a good time to buy, because if you buy now, you can get a good discount from the developer. And I talked about South of Waterside. I think it could get anywhere from a 5 to 6% discount. When I reserved my unit, because I did it 3 months ago, they were only doing a 2% discount. But because the market has become a little bit more difficult, they're now doing slightly larger discounts. So I think waiting for Brexit is going to have no major effect on the London property market now. We've had the Brexit decision, we had Boris Johnson's election. Post Boris Johnson election, the market started to really move up again. And obviously we got flummoxed by COVID. So I think because of all the restrictions that COVID has brought, this is actually as good a time as any to buy. So my honest view is, if this is your first time to buy, get your finances in order, get your money ready, and look for something to buy now that you're happy with. Obviously, if it's your own home and you're going to use it, it's slightly different. But if for investment, you just want something in a good area that's going to rent well and you're going to get a good price on. I wouldn't wait till next year. Clearly, if you wait till next year, you might no longer, if developers do very well and the market goes up, you might not get the same kind of discounts you're getting now. And I don't think prices are going to drop at all. I think next year we're going to see prices 3 to 5% higher than they are now.
Thank you. Just one thing to add. So some people who are looking to buy in the UK in general or London, you may be aware that the changes in terms of immigration rule from the UK government about point base. And I'm sure that a lot of Vietnamese people, they may have seen that, especially with the technology and stuff like that, which is Vietnamese people is very high skill in that part. Also, the new rule about international student, where they have 2 years after, like, stay in the UK to look for job after their graduation, is also a good thing. I'm aware that in the group today, there's some people who planning for their children to study and live in London in the next few years. I also think that it's maybe a good time for them to consider 100%. To buy at the moment, let out while you're waiting for your children get ready, timing, and come to the UK, London, after all of these, like, back to normal.
I 100% agree. 100% agree. I think it's a lot of parents in Asia buy properties for their children, and they buy way in advance. The thing is, it's a very good investment. So if you're buying for your children to stay and you buy in London, that's the capital city, chances are they'll go to a university. And if they don't, you can either keep renting it or you can sell it and buy something else. That's my advice. If you have children going to come, it's a fantastic thing to do. The visa extension is, we've been calling for that for years. It doesn't make sense that someone's educated here and has to leave the country to go back to their home country and not come back until they've got a visa. If they extend it for 2 years, that will only help the market. And if people stay, if they haven't already bought, then they will buy. And that's a really good thing. So again, if that change happens, you're going to see more people buying.
Great, thank you. So the second question that we have is a very basic question, that how do we search for house in London, either if you look to buy for living in or to look as an investment in, like, first investment in London?
Well, I mean, I think, you know, how do we search? You can obviously do it yourself if you want, and you can go on the internet and search, but you're thousands of miles away. And, you know, even if you have a family member, everybody might have a relative who lives here. They're not really investors. They're just going to have a look and say, oh, it looks like a nice house, or it looks like a nice area. This is my honest advice, is it takes so much time, so much effort to do it. It's better to work with an agent. Someone like us, doesn't have to be me, but someone like us who's going to be honest. Because the difference with me over many agents is, yes, I'd like to sell you a property if you want to buy, but I'm there for the journey, for the time while you own a London property. I'm there to help you let it. I'm there to help you furnish it. I'm there to help you manage it. I'm there to help you sell it when you exit. I'm not here just to sell you something. Our clients stay long term. We have a bulk of 70% of our clients are in Southeast Asia. And because of that, we understand you want a quick response. You want to, you know, you want people to look after it for you and get a good deal. And that's what we do. So my advice is, wherever you're looking for, get a good agent, someone independent, someone you can ask as many questions as you like to, someone like me, but not always me, but whoever, but you need somebody who's going to hold your hand and give you honest advice, not just tell you this is the best thing, this is the best thing, this is the best thing. Whereas I think Southall genuinely is a great thing, but it's not the only option. There are many options. I just personally, the reason I mentioned it is because I've just bought there myself. And I think if I bought there, having lived in London my whole life, I think it has to be pretty good. You know, if I was going to buy in Hanoi, I wouldn't know where to buy. And unless someone, if an agent said, well, I've just bought here, that sounds really good to me. So I think it's really important is you need someone who's going to hold your hand that you can rely on. You know, London property is expensive. It's expensive for everywhere. And you don't want to waste your hard-earned money on buying the wrong thing. You need someone who's going to hold your hand and give you decent advice and guide you. And that's what we do.
That's great. I agree with that point. So for a lot of people, buying their first home is a big chunk of investment. And from my own experience, where as a first-time buyer in London, to live in, the way I'm going to search the property is obviously go on Rightmove, SIBLEY, which is a big platform for property.
Yeah.
And based on that, I will contact, obviously the thing is, you will have to contact with as the agent by the end of the day where, oh, this property I may like, or I wanted to arrange a view and something like that. You still need to go through the estate agent.
Yeah, you still do that.
And yeah, and I agree with you that there's different type of agent who will actually help you and appreciate that, yes, that's a big investment. That's where you wanted to buy to live in, or wanted to buy to let to get a high yield as possible.
100%.
Then you really need to, you know, look into it and choose the right estate agent for yourself. It's not only like, oh, they may have a good reputation. It's maybe, yes, they have a good reputation in that bit, but they may not just work well with you in that sense.
100%. 100%. I mean, I think that's the point. You need someone to hold your hand and look after you. And we have many clients in Asia that buy for their own use. And if I can get a fee, then I will charge the seller. If not, then the buyer will pay me something. So then they know they can rely on me to go and pick out the things that are problems with the property. So they know you need someone to look up to help you through this process. As I said, it's expensive. It's a lot of money, and you want to protect your own hard-earned money. And that's why it's good to have someone to help you. In fact, I saw a couple of questions here. There have been a few quite interesting questions. One person, Ad, just asked, is London a good place to start for buy-to-let properties? And what's the best yield in London, you think, for buy-to-let? Well, I think London is the only place to buy for buy-to-let, if I'm really honest. I personally only buy and have only ever bought in London. Why? Because as I gave the points earlier, London is the capital of the UK, and it's where the most of industry is and where most of the companies are. Outside London, there's a lot of homeowners who will buy their own home, whereas in London, because of the expense or because of the transientness and lots of overseas people are there are tons and tons of tenants. I cannot tell you, we on average run at about 45 tenants register with us for every single property that is available. 45, that's our average. So I think because of that, you should, you know, I prefer London. And I think there are other hotspots. People talk about Manchester, which is now becoming oversupply. People talk about Birmingham. It's on the up, and we have some schemes that we're selling in Birmingham, but that's for someone who wants higher yield, but maybe not so much capital gain. And there are other cities, but for me, if you're going to spend on those areas for the little bit more that you can get into one of the outer zones in London, that's where you want to be. And that's why I like Southall. I keep coming back to it. It's zone 4/5. It's near Heathrow. It's in the west. It's easy to get into town, and it's part of, and it's London. So therefore, I think that's really good. And in terms of yields, London average is circa 4% gross yield. That's what you tend to get. Southall will be 4.5 to 4.7, depending if it's a one bedroom. You might, if you were really lucky, might just touch 5%, but that's very high. Generally in London, 4%. If you go to the most expensive areas, it drops to under 2%. If you go outside London and you can get things that are 7% yield, you will get zero capital gain. I meet clients all the time who say, oh, Mark, I'm getting 8% yield, but they've never seen any capital gain. And the thing about property is you should be getting a blend of capital gain and income. You should be getting both. Sorry, so that I just answered that question because I thought it was quite interesting.
Yeah, that's great. I'm not sure if you wanted to pick up any other question that we have.
So that the other couple of questions that I think have asked is Uyen asked, I'm not a first-time buyer. If I want to invest on buy-to-let, how many percentage tax I have to pay at the moment? So if you're not a first-time buyer, that means you already own another property. And if you already own another property, you have to pay an additional 3% stamp duty to buy a second property. If it's going to be let out or it's going to be a second home, you have to pay 3%. But at the moment, if you complete by March next year, March 21, you won't pay any more stamp duty up to £500,000. So you pay nothing except for the 3%. So that's potentially up to £500,000, £15,000 saving. But the tax rate, the other taxes just depend on your income. So if you've got mortgage, you can deduct the mortgage interest. You can deduct any expenses like your service charge. You can deduct any costs that you have, and you generally pay anywhere from 20% tax on the income. But obviously, as I said earlier, property investment is both yield, income, and it's also capital gain. So with the capital gain, you'll pay as much as you pay between 18 and 28% capital gain. If you buy into a company structure, then the costs are ever so slightly different. But it's just depending on your personal circumstance. If you're only buying one other property, then it's not worth it with a company. But if you are going to buy more than one property, then you should consider a company. And then we have a fantastic structure that's set up where a Singapore company have got for overseas investors to set up a company, a UK company. So no hanky-panky company in a funny jurisdiction. A UK company which will cost £500 to set up and £250 a year to run for everything. For everything. That's very good, and it works for any nationality can buy it, and it's very, very, very good value. So that's a good structure. But as I said, the taxes are relatively low, and it's a nice thing to have because it means you're making money. So Darway said, since April 2020, you can no longer deduct any mortgage interest from your rental income before tax. Actually, that's technically not true. So what the government did is they changed the way that you deduct your interest. So as a non-UK resident, if you're Vietnamese and live in Vietnam and you own a property in the UK and you rent it out, you can deduct your interest at the basic rate of tax, which is 20%. You have to pay tax on your income at the higher rate. But if you only own one or two properties, then your income will not be sufficient to pay more than 20%. So actually, in that scenario, you're still able to offset the full amount of interest against your income. For people like me, UK residents, they add the income to my salary. So for me, it's for British people, the taxes are really hideous now. But for overseas people with one property or potentially two properties, it's not so bad. But as I said, if you're worried about that and you were to buy a property into a company, then you can offset the full expenses. And it almost ends up about the same for a company ownership. But I think there's that. So I think Tuyet asked, what criteria should I look into when looking for property in London? So the criteria to look for are, if it's your own, if it's something you're going to use, or for your children, you need to look at the location. But more for investment, you need to not get too personally involved and not worry so much about where it is and what it is and how does it look. You need to think about who's going to buy it from me when I want to sell. So if you buy in a regeneration area like Southall, then you are buying something that over time it will get better and better. So you will get an increased demand for it, and therefore you'll be able to sell with a profit. In the interim, you've got to let it. So again, you need to be focusing on areas that tenants or people are going to want to rent. So it needs to be near a station. It needs to be good quality building, so that many of our tenants, so we survey our tenants from time to time, 72% of them say they want to have a concierge. So that's 3 in 4 want to have some form of security there to take packages in the day. If they're working all day and not at home, who's going to be there to take their box from Amazon or eBay or whatever it's going to be? No one. So people want concierge. Close to transport is the number one though. Concierge is another one. The other facilities like pool and gym and spa, people love that, and cinema rooms. But for me, the two criteria are close to transport and having some form of security. Those are the two true drivers.
I totally agree with you.
Any part of London. Sorry.
Yeah, no, sorry. I totally agree with you in terms of like near public transport, because it's obviously different between Vietnam and the UK, especially in London. In Vietnam, we have loads of private vehicle, especially scooter. But here in London, especially recently, I think the congestion charge has increased. Near to public transport is a key thing, like key criteria in London. Going with that point, I think I wanted to go back with the question we had before about which area is good to buy in London, and where do you recommend sourcing property with investment potential at small end of the scale?
Great, they're really good questions. This is a classic question that I get asked by investors every day. If I'm honest, I don't have a crystal ball, so I cannot tell you this is the best place to be. All you can take is experience and try to follow the tips that we give people. So where do we recommend with investment potential at the smaller end of the scale? Smaller end is the best, because this is where you can split your money. Even people that come with large budgets, I always recommend split it into 3 or 4 units, because then you have much less reliance on one unit and you have more coverage. And where do I recommend? It turns into the second question about, about the zones and being further out, and a good place to invest is it's good to go out to the further zones, zone 3, zone 4, zone 5. Don't focus on the prime central London, because it's going to be too expensive. If you go to zone 4 or go to zone 5, like I'm talking about with Southall, if you can buy a 1-bedroom flat for £300,000, it's on top of a station, it's got a concierge, it has got all the other facilities. There is parking if you wanted it, because some people will want parking for driving, but its connectivity is so good. These are fantastic opportunities. The other 2 regeneration pieces are the 2 examples I gave earlier. Beaufort Park is in northwest London. We love that scheme. It's right on the Northern Line, gets straight into central London in 25 minutes. It's done incredibly well. And at the other side of London, in southeast London, is Kidbrooke. That's done incredibly well. Royal Arsenal is again on the Woolwich Station, which is going to be Crossrail. there's not one specific area to buy. If you ask me today, what should I buy? If I want to buy something smaller end, buy Southall. That's what I've just done. If you're asking for my honest advice, that is exactly what I just did. And I just bought there because it has all the factors that I think will give me good long-term capital gain, good yield, and will rent quickly. So, you know, as I said, there's very, very different areas you can look at. But for me, I'd look at further out zones. Those are the best places to look at.
Thank you. Come back to the live question. Dal were asking, obviously, Mark, thank you for the webinar. Being invested personally yourself obviously give us some degree of reassurance. Nonetheless, what would you say are the main drawbacks and compromise of this Southall waterside development that you mentioned?
That's great. Okay, so that's a good question. So I wish the developer was here, because these are the questions I love to ask a developer. What are the main drawbacks or compromises? Honestly, the main drawback and compromise is that it's further out. It is further out. It's near Heathrow Airport. It is not prime central London. That is a drawback for some people. If some people want to go to Oxford Street every day and want to walk there, it's impossible because that's far away. However, you couldn't walk there. However, it's all about costs. And I genuinely cannot see any any serious negatives that will put me off buying, because it's on the Crossrail station. Obviously, a drawback here is you're reliant on Crossrail opening, and Crossrail, we all know it was meant to have already opened, and it's had some delays, and you know, it is a massive infrastructure project which cost an absolute fortune, and that these things do sometimes run back, but it is going to open. They're saying, I heard it was going to be middle of 2021. I now hear it's going to be end of 21, beginning of 22. But I think that's a potential compromise and a drawback, because you've got to wait for that to open. But these are small time drawbacks and compromises. These are only short term, because there's still a station there. Okay, it'll take a bit longer, so that might impact on the maximum rent you can get at the beginning. But it's a risk worth taking. The 4 blocks that I showed you, the first phase, that is the closest walking distance to the station. So usually a developer will build in the middle of the scheme. They won't build right next to the station because they want to charge a premium for those. But because of the way the scheme is designed, they have to start there. So actually, okay, you may take a small impact at the beginning, but I think in the long term, you want to be in phase 1 in one of these 4 buildings to be right next to the station. And if you want to save on the stamp duty, you want to be in phase 1 and phase 2. However, if you buy in phase 1 and if you buy in block 1 or block 2, you won't be able to, you'll save the stamp duty, but Crossrail won't be open. So you'll get a little less rent, but that won't affect your overall long-term ambitions for capital appreciation, because that's why people buy. And certainly, I honestly can't see any massive negativities. The high street of Southall is not a very nice high street. That's a drawback. It's a horrible high street. It looks like something out of the art. However, Southall Waterside, the development, is going to build its own shopping area. So you will come out of the station and you'll be in the development with a cinema. There's going to be a school. There's going to be restaurants. There's going to be bars. You don't need to see the high street. So there are little compromises, but they're not massive compromises or massive drawbacks that should put you off buying something like this. Every regeneration scheme is going to have some negativity. What's another drawback? It's going to be a 20-year project. So there is going to be some form of construction going on, but that doesn't affect the way that your tenant or you would enjoy your asset, because Berkeley are really amazing. And it's not just me selling them in the way they build. They segregate off areas. So facilities open pretty soon, and you're able to use all of the facilities as soon as they open, and it doesn't impact on you. But I mean, that will be the other drawback. But seriously, I've bought, so I think it's going to be good. And I work in property, and if it's not, obviously I've only got myself to blame, but I think it's a really good thing to consider.
That's great. Thank you. Mark, we have 2 other live question. I think one question that's interesting to me, that you have mentioned investors should pay attention on the future buyer and potential tenant when buying a property, especially obviously buy to let. What is your preferred type of tenant?
That's a really good question.
Or buyer?
I wasn't meaning to select my buyer. I wasn't meaning I have to have Mr. Jones buy it. But what I'm talking about is I want to look at things that I always try to explain things is that I want the least number of people not to want to live in my unit or not to want to buy my unit. So if I buy a car, I want the car to be the color that is going to put off the least number of people when I come to sell it. So maybe Mercedes-Benz are selling a bright orange colored car, but we all know who's going to buy a bright orange car when you come to sell it. They may give you a great deal today, but it's going to be quite hard to sell when you come to sell it. So I look at that with property. And so therefore, when I say looking at the future buyers, I'm looking at, you need it to be price driven, because everything in London is price driven, as it is globally. But you want it to be within a price point that people can afford to buy. I don't just want to be able to sell to investors because they're the only ones who can afford it. I want to sell into the local market. And because it's a regeneration, I'm looking at local people buying these flats. And I think that's why this stacks up. You're looking at your future buyer, local people, whether that, if you buy a 1-bedroom flat, you might sell to a single person or a couple. If it's a 2-bedroom flat, you might sell to a single person who wants to study because of obviously home working. You might sell it to a couple. Maybe you're going to sell it to a couple who are having a baby. But these are the options. You want to have the most number of people want to live there. And in terms of your tenants, again, you want to have yourselves as open for business as you can. So you want to draw in the most tenants. So that's, again, London is expensive and rents are high in London. But this area is less expensive. So if it's less expensive, more people can afford it. And because it's good transport links, it's easy to get to. So people in London don't mind commuting to work for up to an hour. Canary Wharf is the biggest CBD in the UK. Just under 500,000 people work there. If they can get on a Crossrail line straight into Southall, you're going to see lots of first job, second job professionals wanting to live on something that's brand new or quality that's going to have this space. So again, I'm not saying this is the only development, because there are others, but your future buyer for me is going to be buying a unit that anybody can afford to buy when you come to sell. Whether that's, as I said, I would buy, something that's decent size. If you're buying a 2-bedroom flat, only buy one with 1 bathroom. This is one of my biggest tips I get everybody. If you buy a 2-bedroom with 1 bathroom, you will never be able to rent that flat to 2 sharers. And also, because they won't share a bathroom. This is not in the student days where people share bathrooms. 2 professional students will have to have their own bathroom, so you must buy 2 bathrooms. Second thing is, if you rent to a couple, if your couple are your tenants or future buyers, they're going to be put off with 1 bathroom, because unless they're going to use it as an office, if people come to stay, then they've got to use the same bathroom, especially with COVID now, with people being much more, hand wiping and sanitizing, all of these kind of things. People, you don't want guests coming in and you having to use your toilet that you use all the time. So my advice is, even though it's cheaper, do not buy a 1-bathroom flat if you can avoid it.
Thank you. You touched on the point of the next question that I wanted to quickly go through. Is that there's a question about post-COVID situation where more people will work from home. So do you think that house in London will permanently less demanding than they were to a certain extent?
So that's again a very good question, very topical. There has been a big talk about home working and big jump in numbers of people looking for properties outside London which have more space. Actually, what we've seen as a business, not just generic portals, because remember, portals report stuff that people are just searching for, that have no intention of dealing with. But what we're seeing is there has been a marked increase in people wanting some form of outside space, because if they've been locked in for 3 months, not going to work, not being able to go out very much and only go to the shops, being stuck in an apartment with no outside space is really important. So it's really important not to have that. And so now we've had a big jump in inquiries for people with outside space. Do I really think that people are going to now move out of London because of working from home and because it's a bit cheaper? Absolutely not. Living in London for people, whether they're from overseas who have it as a second home, for their children's education, and for people renting, is not about just the cost, and is not just about how much space you have. There's an emotion with living in London. People want the restaurants. They want the theatres. They want the cinemas. They want the life that London has. So I don't see that we're going to see this big exodus from London. I genuinely don't see it. We haven't seen it now. We've seen equal numbers of people coming in, but as I said, it's just been an increase in people asking for outside space. So 100%, I don't think, yes, there will be some more people working from home, which there already were, but there'll be an increase in people working from home, but it won't be permanently working from home. It might be 1 day a week, 2 half days a week, or 2 days a week. They're still going to need to get into work. It's, as I said, living in London is not just about the commute. It's about the actual environment and being in the world's capital city with all of the facilities that it offers. So my answer is honestly no. I don't think you're going to see it.
Great. We are running out of time, so we will just touch on, I think there's one live question.
Yep.
If you want to pick it up. And I think just another question we're still remaining that we collected before.
Okay, so Stuart asked, is there any differences between buying leasehold and freehold properties in terms of reducing rates for stamp duty, land tax? No. The only answer is there's no difference between leasehold and freehold for stamp duty. It's exactly the same. It's done on the value of the property. And at the moment, up to £500,000 for your first property is no stamp duty. Above £500,000, you pay the normal stamp duty. So if you're spending £500,000 and above, you save £15,000 if you buy it before March. That doesn't matter whether it's leasehold or freehold. There's no difference whatsoever in terms of stamp duty or any of the taxes for that matter. The only difference is the facilities you have and the cost of running them. If you have a freehold house, because that's the only way you can have freehold, then you do the insurance yourself, you do the maintenance yourself, you do everything yourself. There's no difference in the costs.
Great. So I think we go with the final question about the recent speech by the UK Prime Minister Boris Johnson recently regarding the ease of planning permission and requirement to convert commercial property to residential. Obviously, the question coming up is, will that affect the price for flat in Central?
That's correct. So good question. Remember, this is not new. Converting commercial into residential has been going on for the last 7-8 years now, where they relaxed the restriction in turning office buildings into residential. The reality is the UK runs, and London especially, runs on a huge acute shortage of accommodation. There are not enough homes for people. That's homes for people to live in who want to buy, and that's homes for people that want to rent. Yes, it's expensive, and we're not only talking about super luxury homes, but general housing is massively undersupplied. And every time governments come to power, they promise they're going to fix this problem and build tons and tons and tons of homes. Sadiq Khan, 250,000 a year, I think he predicted, and he'll struggle to do a tenth of that. The problem is its planning is difficult, and that's why they've restricted it, relaxed it, and made it easier to convert commercial into residential. Is that going to help affect the pricing? 100% not. Sometimes people are a bit funny about apartments or homes in commercial buildings because they weren't built as such. They weren't built as homes. They were built as offices. So often the sizes are a bit funny sometimes, and there's not enough space to get in what people need. However, it's all price driven. Everything in the London property market and UK property market is price driven. So my view is it won't affect the price and bring them down. I hope they build more accommodation because we need it. And I don't think it'll make any effect on prices. I mean, as I said, it's all price dependent, and some buildings, some office buildings are not the prettiest to look at from the outside, and there's lots of work that needs doing to make them look nice. I hope there's going to be a lot more, but it's the amount that we're going to see, it's not sufficient. And what we did see that's happened over the last 5 years with more commercial buildings being converted into residential, we saw a reduction in obviously commercial space because commercial sells for less than residential does. And now there's a shortage of office space. So actually what you've now seen is it go down like that and go back up because there's now big demand for office space. Office prices have now gone back up, and it means now developers are wanting to not convert commercial into residential. So frankly, these are cycles, and I don't, yeah, as I said, I think it's a good thing because we need more stock, but I don't think it's going to affect prices.
Thank you very much. I think our time is run out, and thank you very much for your time. Thank you everyone for your time joining the talk. And if you have any question that we haven't picked up today, please feel free to, I'm guessing, contact Mark.
Yeah, or contact Chow. You don't have
myself.
to contact either of us. I don't speak Vietnamese, sorry, so you're going to have to ask me in English. And if you send it to me in Vietnamese, then I'll send it to Chow. But yeah, we'd love to help you. Any questions you've asked, I'm happy to ask, or I'm happy to answer, or Chow can answer. It's fine.
Thank you very much.
Thank you. If you're interested in Southall, do get in touch with me, please. I'd love to help you if you want it, and I can show you what I bought if you're interested.
That's great. I will contact you after.
Thank you very much.
Thank you. Thank you, everyone.
Thanks.